Welcome to the deep dive. Our mission today, well, it's pretty specific. We're using your source material, the autonomous economy, AI agents, and Web3 convergence.
That's right.
And we're going deep into how these AI agents and decentralized Web3 systems are starting to collide.
Yeah, colliding, merging, creating something totally new, really.
Our job here is to kind of synthesize what we're seeing in industry reports, the institutional research, even technical white papers.
Exactly. We need to figure out the fundamental mechanics of how this is all coming together.
We're definitely looking beyond just the headlines. We've dug into projections from analysts like the stuff Yahoo Finance covered.
And the more structural analysis from firms like McKinsey, plus the actual white papers from the projects building this stuff.
Right. The goal is to give you the crucial insights, the need-to-know stuff about how this collaboration is probably going to reshape finance, work, everything.
The whole landscape, potentially.
And let's be clear, when we say AI agents, we're not just talking about like a smarter Siri or Alexa.
No, definitely not. These are different.
We're talking about autonomous digital entities, programs that can actually set their own goals, multi-step goals.
Make complex decisions, execute tasks.
High-frequency trading, negotiated contracts.
Yeah.
I mean, even running small software businesses, right? All on their own.
Without a human directly pulling the strings for every single action. That's the key.
And analysts, they're not mincing words here. They're making comparisons to the arrival of the internet or, the smartphone.
It's that level of potential disruption, a fundamental shift.
Okay, let's unpack this. So maybe start with the basics. What really separates an AI agent from, say, the generative AI we've all been playing with?
It really boils down to the autonomy, the ability to act independently.
Act?
Yeah. A typical generative model, like ChatGPT, it waits for your prompt, right? It responds. An AI agent, though, by definition, it's goal-directed. It perceives its environment. It reasons about what steps to take next to achieve its goal, and then it executes those actions.
So it's proactive, not just reactive.
Yeah, exactly. They're designed to be the digital workforce of the future, essentially.
And the scale of that digital workforce, I mean, the projections are kind of mind-blowing. The sources really paint a picture of economic disruption here.
Oh, the numbers are definitely attention-grabbing. The analysts we looked at, especially the ones focused on digital workflows, they're projecting that these autonomous agents could manage and actually execute up to 40% of current digital tasks by 2030.
40%.
40%. Think about that. That's a huge shift in how digital work gets done.
And for investors, what does that look like?
Well, it translates into a massive potential market. We're talking possibly over $1 trillion. That covers the compute, the hardware.
The TPUs and all that?
Right. And really critically, the AI token ecosystems. Those are the sort of operational layers these agents will run on.
Okay, but this raises a big question, doesn't it? The sources seem to highlight this tension. Is this all just good news for productivity, or is the worry about job displacement real, especially for, like, routine digital jobs?
Well, the honest answer, at least for now, seems to be both. It's complicated.
How so?
Companies are already integrating these kinds of autonomous workers. We see it in marketing campaign management, speeding up software development cycles, automating financial reconciliation.
Customer support, too, I bet. 24/7 support.
Definitely. Robust support. So yes, the goal is boosting productivity, efficiency, but the structure of jobs that are mainly about managing digital inputs and outputs, that's fundamentally changing. The agent isn't just doing one step, it's taking over the whole loop.
Right, which is where the displacement concern comes in.
Exactly. But here's where it gets really interesting. For these agents to reach that full potential, that trillion-dollar market we mentioned, they need to operate freely.
Constrained.
Freely. Yeah, and that requirement leads us straight to why this convergence with Web3 is happening. It's not just a cool idea. It seems to be necessary.
Why can't they just run on, say, AWS or Google Cloud?
Because achieving true, what you might call permissionless autonomy, it's basically impossible under the traditional centralized tech giants.
Okay, explain that. Why does centralization fundamentally break the model for a truly autonomous AI? What's the deep reason?
It's the control factor. A centralized system, by its very nature, always has a kill switch. Always.
Meaning the company running the servers can pull the plug?
Precisely. If your AI agent relies entirely on a specific corporate cloud or needs API keys from, say, Google or OpenAI, that company can revoke its access.
And they probably would if the agent did something they didn't like, or even if they just changed their terms of service.
Exactly. An entity that's supposed to be autonomous, potentially managing assets or contracts, it just can't function if its core identity, its wallet, its ability to operate can be unilaterally shut down by a single company. It needs, well, censorship resistance.
Ah, okay. So Web3 isn't just a feature. It's actually the required foundation for that level of independence.
It seems that way. It provides the necessary infrastructure.
So what specific tools from the Web3 world do these agents need to operate in this permissionless way?
Basically, everything a digital entity would need to act like an independent economic actor. They need a verifiable identity, right? Something self-sovereign, so they can build reputation and trust without relying on a central authority.
Like a decentralized ID.
Exactly. Then they need payments. Trustless peer-to-peer payments, which means crypto wallets. And they need secure data storage. Immutable storage, so their operational records, their learning models, aren't vulnerable to tampering or deletion by a single provider.
Okay, identity, payments, data.
Right. And this creates this huge built-in demand for core Web3 tools. Smart contracts become essential for executing tasks securely and automatically. DAOs, decentralized autonomous organizations, become the way to govern agent behavior or manage shared resources transparently.
So the agent itself is like a native user of the blockchain. It holds crypto, sends transactions, just like a person would.
Yes, exactly. It's not just using crypto as a payment rail tacked on the side. The agent operates its own crypto wallet. It can use that to transact, maybe stake capital for yield, or even make investments autonomously based on its programming.
Wow.
And this tight synthesis, this combination, it's leading analysts to predict what could be one of the most powerful trends in digital finance: the merger of AI and DeFi, AI plus DeFi.
Okay, AI plus DeFi. Give us a quick example. Make that tangible. What does that actually look like?
Okay. Think about yield farming or liquidity provision in DeFi. Super complex, changes constantly.
Right, chasing the best rates, managing risk.
Exactly. Now imagine an autonomous agent programmed with the goal: maximize returns on this pool of stablecoins within these risk parameters, instead of a human trader manually monitoring dozens of protocols, calculating risks, moving funds.
Which takes time and is prone to error or emotion.
Right. The agent does it all. It monitors interest rates across multiple blockchains in real time. It executes complex multi-step swaps via smart contracts. It manages liquidity positions. It dynamically adjusts its risk exposure based on market conditions, all trustlessly, 24/7, without the latency or the fat fingers of a human manager.
And that scales, presumably.
It scales massively. Think about managing the entire life cycle of tokenized real-world assets, from issuance to trading to compliance monitoring. An agent could potentially handle large parts of that autonomously.
Okay, I see it now. And that inherent capability, that's why analysts are pointing to this convergence as potentially a core narrative for the next big crypto cycle.
It makes sense, doesn't it?
Alright.
Crypto provides the essential layers that these agents need to function independently and at scale. The trustless verification, the secure identity, the global programmable payment layers. They're all prerequisites for this decentralized AI agent economy.
It's the infrastructure for autonomy.
Precisely. And the exciting part is we're not just talking theory here. There are projects actively building this now. You've got pioneers laying the groundwork.
Like who? Who's mentioned in the sources?
Well, projects like Fetch.ai, FET, they're focused on creating decentralized marketplaces where agents can find each other, offer services, and transact.
So like an agent job board.
Sort of, yeah, but much more dynamic and automated. Then there's SingularityNet, AGIX. Their focus is more on democratizing AI itself, making it easier to create, share, and deploy AI services in a decentralized way.
Okay.
And another one is Autonola's, OLAS. They're working on the coordination framework. How do you get multiple autonomous agents, maybe running off-chain for efficiency, to work together reliably while still anchoring their key actions and agreements immutably on-chain? That's a complex problem they're tackling.
So Fetch for the marketplace, SingularityNet for the AI tools, Autonolas for the coordination.
In simple terms, yeah, they're building the digital roads, the shops, the governance systems for this emerging agent economy. Now, if you connect this to the bigger picture, you might think big tech sees all this decentralization as a threat, right?
You might assume that, yeah.
Yeah.
They like their walled gardens.
But interestingly, they're actually laying a lot of the crucial groundwork, especially on the AI model side. Microsoft is embedding agent capabilities deeper and deeper into Copilot.
We're seeing that.
Google's pushing hard with models like Gemini and these multimodal systems like Project Astra, which are designed to perceive and act in the world. And OpenAI, of course, is building out frameworks to support more specialized, capable agents.
And speaking of OpenAI, there's a really critical insight from the sources about monetization potential. This rumored focus on an app store for autonomous bots.
Ah, yes, that's potentially huge.
Explain that. Why is that such a big deal?
Well, think about the impact the original smartphone app stores had. They created a massive new marketplace, unleashed incredible innovation from developers, and changed how we interact with technology.
Right, it became the distribution channel.
Exactly. So the idea of a similar marketplace, but for highly specialized AI agents,
Huh.
agents you could potentially hire or subscribe to for specific tasks, whether it's financial analysis, coding assistance, marketing automation, that could be another seismic shift. It creates a direct path for retail and business access to these powerful tools.
And the institutional money, is it following this? Where's the smart money going, according to the research?
Oh, yeah, the focus is definitely measurable, especially when you look at the infrastructure level. Obviously, huge capital is flowing into the core compute backbone, the GPU data centers. That benefits the giants like NVIDIA and AMD.
Yeah.
But institutional investors are also clearly piling into more specialized, crypto-adjacent firms that enable this decentralized vision. Render Network, RNDR, is a key example.
What do they do?
They provide decentralized GPU compute power. So instead of relying solely on Amazon or Google's data centers to train and run these huge AI models, you can tap into a distributed network of GPUs. That's crucial for decentralization and potentially lowers costs.
Okay, decentralized compute. Makes sense. Anyone else?
Bittensoar, TAO, is another interesting one. They're building something like a decentralized marketplace specifically for machine learning models themselves. The idea is to turn AI intelligence and the compute power that runs it into a kind of tradable commodity.
So buying and selling AI models on a network.
Essentially, yeah, fostering competition and innovation in a decentralized way.
Well, let's ground this with some hard data. Did the sources show market metrics reflecting this focus?
They did. The numbers really underscore the intensity. If you look at the combined market cap of several key AI-related crypto projects like AGIX, FET, RNDR, TAO that we mentioned, saw absolutely explosive growth, over 500%, between just 2023 and early 2025.
500%. Wow. Okay, so this isn't just theoretical hype. Real capital is flowing into the enabling infrastructure.
It certainly appears that way. The market is actively betting on this convergence being a major theme.
And the long-term potential justifies it.
Well, if you look at forecasts from firms like McKinsey, they project staggering numbers.
Right.
Something like $4.4 trillion in annual productivity gains globally by 2030, directly attributable to generative AI and the kind of automation these agents enable.
4 trillion annually.
Yeah. The economic structures, the big consulting firms, they're clearly preparing for autonomous agents to become, standard operating procedure in many industries.
We've even seen glimpses of this potential already, right? With those open source projects that went viral for a bit.
Oh, you mean like AutoGPT and Baby AGI?
Yeah, those ones.
Absolutely. Those are fascinating early examples. They really demonstrated, even if crudely at the time, that an AI could be given a high-level goal and then autonomously break it down. It could self-prompt, run web searches, write and debug code, interact with tools.
And keep iterating, right? Trying different approaches until it achieved the goal.
Exactly. They showed that the core concept of an AI driving itself to complete complex multi-step tasks was viable. The potential for independent action was proven, even if the reliability wasn't quite there yet in those early versions.
Okay, but this incredible capability, this autonomy, it inevitably leads to the governance question, doesn't it?
It absolutely does. It's maybe the most critical challenge.
What happens when these autonomous agents making real financial decisions, executing code that affects the real world? What happens when they mess up? Or worse, what if they're programmed or learn to act maliciously?
Right.
We have to talk about accountability, transparency, control. How do you manage bots that are designed to be independent?
And the sources are very clear on the major concerns here. It goes beyond just simple bugs or errors.
What are the big risks they highlight?
We're talking about the potential for really sophisticated AI-driven market manipulation at scale. Imagine bots coordinating trades faster than humans can react.
Or generating high-quality misinformation,
Yes.
fake news, deep fakes, and spreading it rapidly.
Precisely. Or the nightmare scenario, fully autonomous hacking operations or trading bots that go rogue, causing financial instability, all happening without a clear human operator to point the finger at.
If the agent is decentralized and permissionless, who is responsible? Who do you hold accountable?
That's the crux of the problem, isn't it? You can't exactly find a smart contract or throw an algorithm in jail.
So how do we build trust into a system run by potentially uncontrollable agents?
Well, this is where the proposed solution loops right back to Web3, specifically to its strongest feature, transparency and immutability.
Okay.
Analysts and researchers are strongly advocating for integrating what they call on-chain accountability.
On-chain accountability. What does that mean in practice?
It means that every significant action taken by an AI agent, every financial transaction it makes, every smart contract it executes, maybe even every critical decision or governance vote it participates in gets logged permanently, immutably, on a public blockchain ledger.
So you create a permanent, unchangeable record of everything the agent does,
Exactly. It's about creating a verifiable audit trail.
tied to the agent's decentralized identity we talked about earlier.
Yes. So if an agent executes a suspicious trade or participates in manipulating some system, regulators, auditors, or even the public could potentially look at the blockchain record. They could definitively see which unique decentralized identifier the agent's wallet or ID performed that action, exactly when it happened, and maybe even what specific code or smart contract was involved.
Ah, okay. So even if the agent itself is permissionless and can't be easily switched off, its actions are completely transparent and traceable after the fact.
That's the idea. It's how you maintain trust and enable consequences, or at least analysis, in a decentralized ecosystem. Accountability itself has to be decentralized if the actors are decentralized. You can't rely on a central company's private logs.
Okay, that makes sense. So let's try and synthesize this for you, the listener. The big picture emerging from the sources seems to be this. Big tech is definitely pushing the envelope on the AI models themselves, making them more capable.
Right, they're building the engines.
But the true autonomous economy, the one that could genuinely scale to trillions of dollars,
Yeah.
the one that might handle 40% of digital work, that version, seems to fundamentally require Web3's infrastructure.
Yeah, it needs that decentralized foundation for trustless payments, for secure and independent identity, and for that verifiable on-chain transparency we just discussed.
The autonomy needs the decentralized rails to run on.
It appears so. And that leads us to sort of the final provocative thought that the source material leaves us with. It's a really big question.
Okay, what is it?
If AI agents can truly operate autonomously, earning money, spending it, investing capital, trading assets, maybe even owning resources, all completely independent of direct human control, are we actually entering a fundamentally new era? Are we looking at the dawn of, well, machine capitalism?
Machine capitalism. Wow, that's
Yes.
definitely something to chew on. It completely reframes the relationship between technology, economics, and maybe even consciousness down the line.
It's a profound question raised by this convergence.
Okay, that feels like a good place to pause our deep dive for today. Hopefully you found these insights valuable, thinking about AI plus DeFi, why that on-chain accountability is so critical.
And the sheer scale of the potential shift.
Exactly. And look, if you did find this useful, if you learned something new, the best way to support us doing more deep dives like this is simply to engage with the channel.
Yeah, it really does help.
Liking the video, subscribing if you haven't already, maybe hitting that notification bell. It tells the algorithms that this kind of specialized content is valuable.
And it allows us to keep digging into these complex topics at the intersection of AI, crypto, blockchain, and, the future of the digital economy.
We appreciate the support. Now, we want to turn it over to you. Knowing what you know now, the immense potential, but also the significant risks we discussed, would you trust an autonomous AI agent?
Would you let one manage your business, your investments, your crypto portfolio?
Let us know your thoughts in the comments below. We're genuinely curious to hear your take. And hey, the most insightful answers might just get a shout out in our next session.
Looking forward to reading those.
Thanks for joining us on the Deep Dive. We'll see you next time.